day. My name is Aman Raina. I'm an investment coach here at Sage Investors, and welcome to another edition of Stock Talk. Today I want to talk a little bit about interest rates, especially here in Canada. With the stock market, the TSX index not doing really well, and the overall economy just looked like it's just skidding to a grinding halt. There's been a lot of talk and scuttlebutt out there that the Bank of Canada, when they meet this week, that they should perhaps consider lowering interest rates. And so when you hear a lot of that, what I'm trying to do is kind of mind map what that means. Like, why would lowering interest rates from really an already current uber low level try to buy the Canadian economy, and ultimately from an investment perspective, how does that work? So I try to mind map some ideas in terms of what that impact would be. So essentially, if the Bank of Canada were to drop interest rates again, cut them, it would essentially further lower the Canadian dollar, which is already kind of, a certain way in a free fall mode. Ultimately, that's going to make goods outside the country that we want to import a lot more expensive, and we're already seeing that with food costs. Grocery bills are going up. So from that perspective, and given the fact that we're not seeing a lot of wage growth out there, it's just going to put people in a more harder financial situation, and so that's not a good thing. The other side of it is a lower Canadian dollar is going to make, obviously, our Canadian assets a lot cheaper, and one of the more sought often assets is real estate. We've in several of our cities, Vancouver and Toronto in particular, real estate prices have just exploded over the last 3 or 4 years, and so all of a sudden, if you dropped the interest rates further and lowered the value of the Canadian dollar, all of a sudden those $1 million houses to an American or to somebody in another country are going to look a lot cheaper. And if you think housing prices are crazy right now, they could exacerbate, becoming even worse. So from that perspective, lowering interest rates doesn't make any sense. The thing about it is, the other side of it is, from my perspective, lowering interest rates really wouldn't make any sense because, again, they're already at rock bottom lows, and if we're not getting any stimulus or economic growth based on rock bottom interest rates, then what is lowering further interest rates, or even what the Bank of Canada has even suggested, that they're fiddling around with the concept of having negative interest rates, where you'd actually have to pay the bank money to deposit your money in a bank, which makes sense. It doesn't make sense. The whole point is just encouraging people to just spend. And from that perspective, lowering interest rates just doesn't make sense. I would argue, and I've been arguing quite a bit, that interest rates just are artificially way too low, and it's creating a lot of bubbles in various asset classes. And if anything, interest rates need to rise to ultimately reflect risk, because we live in a capitalist society, and capital gets allocated and invested into resources and ideas and products where there's a return, and where you can get a return. And with zero or low interest rates, it's very difficult to price risk. Like, risk doesn't even exist. And as a result, people are putting their money into assets and investments that are highly risky because they're not getting a return through a traditional interest rate environment. And except for real estate, it's the price of risk is just not reflected, and that's really concerning from a long run position. So, all this talk about lowering interest rates right now, it just doesn't seem to make sense. But you know what? It might happen, and the big worry is, it could exacerbate the situation with respect to asset prices, and it could make things a little bit more unaffordable in terms of food inflation. In terms of us importing goods, it's going to make things a lot more expensive. We're already seeing that. And I just can't see it being a good thing. So I just wanted to kind of spend a few minutes today just talk about this whole concept of potential interest rate cuts. That's pretty much all I was going to talk about. If you have any questions, if you want to ask a question about certain situations with respect to stocks and investing and economics or whatever, feel free to give me a shout. You can get hold of me in a couple of ways, through my website, www.sageinvestors.ca, or through my Twitter handle @SageInvestors, where I'm constantly on there tweeting about various market events and my own personal investment strategies and execution of various trades that I make. So that's pretty much it. My name is Aman Raina. Thank you very much for watching another quick hit edition of Stock Talk, and we'll catch you later.